Hi, my name is Nelson Chu, founder and CEO of Percent, and we're building the modern credit marketplace. I'm excited to be here today with Clark Wen, Managing Director at Crestline Investors. Clark, thanks for coming.
Thank you for having me.
So why don't you tell the viewers a little bit about you and Crestline and what you guys do?
Sure, of course. Crestline is based in Fort Worth. We're a Texas-based fund, managing about $11.5 billion of AUM across multiple strategies. I at Crestline focus mostly opportunistic credit, of which mostly focusing on specialty finance, esoteric asset classes, and also looking at distress, stress situations in the marketplace.
So you've had a very interesting few months, if that's the case.
It's been challenging. I think one of the hardest things to do at this moment in time is looking at assets the way that I used to look at them before. So my team collectively be looking at the whole new world I mentioned, trying to understand how to price and how to value traditional assets and new assets.
Got it. And are there any sectors in particular that stand out to you right now?
I think the hardest thing at this moment is looking at traditional consumer credit. What we're seeing at the conference today has introduced a lot of new factors that we historically never had to consider before. And on top of that, I think origination going into 2023 will also become very challenging as well.
Yeah, I think cost of capital is on everyone's mind at this point, right? Like, how is the issuers that you've been looking at and all the potential opportunities, how are they faring in terms of cost of capital?
I think at this current moment, there is some hesitancy to be the leader into the market. I think the pricing environment is indicating that things would trade wider by 200, 300, 400 basis points. We also believe that investors need to get compensated for the risk they're taking in this very short, brief moment of time. I do think that market will smooth out over time, but how long this will last, no one really knows.
Yeah, it feels like you guys are going to be reacting in real time to the Fed and all the rate changes that are happening. Has there been any issues with deals that were in flight that have been, forcing you to rethink how to structure it and what to do there?
That's a great question. For those deals that are currently in flight, I think patience and perseverance would be the key driver for success. I think diligence period is dragging a little bit longer. I think data point analysis and also diligence in terms of structure is also taking a longer period of time. But ultimately, I think deal will get done. Maybe not at the cost of the originally planned. But I do think that the market still has capital available to absorb the deal flow that's going in. But I do see a lot of deals being pushed into 2023, maybe even latter 2023. So hopefully, that market will come back in the second half.
But your sentiment on private credit as a whole, bullish, bearish, neutral?
Neutral. I think to panic is probably the wrong thing to do. But to say that we have conviction in the marketplace, that would probably also be a misstatement. But in all reality, we are re-upping the deals that we already have in the book with proven management teams and very sound judgment called throughout this whole interest hike environment. I do think that 2023 will be tough for everyone. So I think the jury's still out as to who will be successful in the marketplace.
So let's fast forward beyond 23. What do you think and how do you feel about the future prospects of private credit?
I think the capital allocation is very strong. As many funds out there raising funds, they all recognize that a lot of the capital is coming into private credit in terms of how much the fund has been closing on the fundraise. It's been phenomenal in 2021, 2022. I do believe that the increasing interest rate environment helps returns for private credit, but also pricing risk would be also equally challenging. So I think a double-edged sword from that perspective, but I do think that private credit will be just fine. If not, this is probably the right time to be in private credit.
Fantastic insights. Thanks so much for coming. It was great speaking with you today.
Thank you.